All right, good morning, everybody. This is class 13, I believe it's 13 or 14. This is called institutional bias. And what institutional bias is really big when it comes to intraday trading. What institutional bias is the direction of the market in a bigger time frame. And the reason that we use this in intraday trading is because intraday trading doesn't obey the same orders as swing trading. So this is a big tool that you would need for intraday trading. I'm going to go ahead and start sharing the PowerPoint. Give me 1 second and we can jump right into this. If you guys see anybody that jumps in, because I'm not going to be looking, please just private message them and let them know to mute themselves when they get in. Thank you. All right. Let me do this. And let me do this. Okay. I just need a thumbs up. Can everybody see my screen? All right, cool. All right. Institutional bias, intraday class number 3, Cuatro class 14. Okay. These are the things that we're going to learn. What is institutional bias? What is institutional bias important in intraday? How to use institutional bias in your trading, and how to use institutional bias with your daily structure. And number 5, like always, we're going to do lab. First is, what is institutional bias? The development of trends in FX markets relies on the aggregation of institutional order flow to drive a currency or currency pair in a particular direction. Many new traders often find themselves on the wrong side of these moves and typically spend a lot of time in trap known as fighting the flow. The Forex market has a highly, I'm not even going to say that word, structure, meaning that unlike stock exchanges, there is no physical location for the recording of order flow. Consequently, information on these flows is restricted to bank and larger institutional players, which is our market makers. To put this in simple context, banks and institutions are able to track portions of order flow in the market, but the individual retailer trader cannot. Okay, so to put this in layman's terms, right? So what happens is the market makers see all the orders that are coming in. And when you have like Asia sessions or consolidation sessions, that is them accumulating these orders and figuring out what direction they want to push the market. Okay, we don't have access to that. The only thing that we have is certain indicators that tell us what's going to happen or what might happen, like our TDI when it comes to the sentiment, right? Do you ever see that the sentiment flows, but it doesn't flow as sharp with our candles as we want it to, or with our RSI? And it's because it's a bigger sentiment, it's a bigger unit, which is telling you that they accumulated all of these orders and it's eventually going to do this, and it'll point up or point down. That is flow. That's why they say TDI doesn't lie. So when you get into orders, when you get into trades or intraday trades, you need indicators to tell you what's going to happen, because it doesn't use the same rules as swing trading, because swing trading is pretty much you know, our level counting. It's going to hit these channels, it's going to do this. Intraday trading, 1 hour and down, doesn't do all that. You can't mark up a chart like that like we do in swing trading. So we need stuff to let us know what direction everything is going. Okay, because when it comes to intraday trading, the news, market manipulation, those things affect intraday trading. It doesn't affect swing trading. If you see a monthly chart, weekly chart, daily chart, those things don't affect those things. But if you see, you know, something lower, you'll see huge spikes and breaking of structures, because you know the candles are much smaller and they are affected much easier than a swing trading candle. Okay. What is institutional bias important in intraday trading? Institutional bias is important because since the smaller time frame don't respect the same rules the bigger time frame do, we have to know the direction of trend. That's what we were just talking about. Okay, so this is institutional bias. If you guys look at that indicator that I have, that green indicator, which I am pointing to right here, and that red one, what this does is it tells you when the actual trend is changing, and it tells you on live time on smaller time frames. So you will get, this is an example right here, this entry right here, from this point right here to the lowest point is 63 pips if you would have got in there. Now, if you would have got in here, you would have got a lot more. Probably got double, 120 something pips. But since we don't understand the flow of the smaller time frames, then all we look for is M's and W's. So an example, how I was taught how to do intraday trading with Jakin was go into your 4 hour or your daily, do your trend lines, look for your M's and W's, look for your bounces. And then when it's getting close to the trend line or it hits the trend line, go into your 15-minute and wait for your second leg. Like I teach you guys, take it to the ketchup and mustard. We used to call it ketchup and mustard trades. Now, we used to get out of them, and Jakin still gets out of them because he doesn't know the direction of the trend. With institutional bias, you do know direction. The only thing is that you can hold them as long as you want until the trend actually flips, or you can get out and make quick money. And this is an easy way to do it. Now, when I gave you guys the EMA classes, we spoke about the flip of the water and the blueberry, right? And that means that the EMAs flip, because if it's an uptrend, the EMAs will be under your candles, and if it's a downtrend, the EMAs will be above. If you get into a trade like that, if you wait for the candles to flip, you got about a 95% chance that you're going to win the trade. Okay, this is a little different because this is in a bigger sense. Okay, this is telling you when the whole trend, is going to change in a bigger structure. So this is a 15-minute. So this is 63 pips. I want to show you guys something. Hold on. This is 453 pips on an intraday trade. 453 pips on the intraday trade. And you would have lost all of this because you wouldn't have taken it up here. You would have waited till it flipped, like right here. And from here to here, 453 pips on a 15-minute scale. And all it was the M formation. You can see it right here, the M formation. And they took it down, 453 pips with institutional bias. This is a whole different way of trading. We still have to use our trend line structures. We still have to use, our Elliott waves and everything else, M formations, W formations to give you a reference. But this is 453 pips. It's called institutional bias. And this is the direction of the flow. This is what the market makers are doing. Craig actually trades like this in a smaller sense because he uses the water and the blueberry flip and the EMA flip, and this is how he actually trades. But he trades in a smaller way. If you see, he takes 10, 15 pips. What I'm teaching you guys is that we can take multiple orders here doing this, and we can make 100 pips. And I mean, this is a 15-minute candle. You probably take 100 pips, 45 minutes, an hour, 2 hours, But yeah, this is called institutional bias. All right. So how to use institutional bias with trend line structures. Again, if you mark up something, this is a bigger structure right here. This is the 1 hour, I believe. Yeah, it's the 1 hour. And you mark up a trend line structure and you get your E leg. Your E leg will be your reference to something is going to happen. Okay, after you get a downward trend. So this will be a reference that you use. You can do it the 4 hour, you get your 4 hour structure, your daily structure you can do. And once you get your E leg, you start getting into your 15 minutes and you see the direction is going to change. After the E leg, if it's turning into a W on a downtrend or if it's turning into an M on an uptrend, then at that point, those are the things that you are going to mark down as this is my next trade. and you'll pay attention to it, because it doesn't happen right away. So here on the E leg, she reverses, because if you see the EMA, she reverses and she goes up, but the trade is not active until we get into right here. This is the trade right here. This thing goes up for about 600 and something pips after that flip of the institutional bias. It goes up about 600 and something pips right here. And I actually got that picture, but I thought I put it on here. Let me just give it to you guys real quick. Hold on. Not that one. Give me 1 second, fellas. I'm sorry. I'm just trying to. Oh, there it is. I guess I don't have that anymore. I had that picture. It was like 659 pips after this bias switch here. And again, you're gonna lose this to this unless you just take it. I mean, your EMA is gonna show a W here anyways, unless you just take it. But the for sure bet is this right here. It doesn't turn around after that. It'll tell you when it's actually gonna the institutional bias will confirm the switch of the trend, and she's gone. She's not coming back. And you're literally again, we're doing our trend line structures on the 4 hour and the 1 hour. On 1 day, we're looking for our confirmations, we're looking for our bounces, and then once you get the E leg, the C leg, the B, whatever leg you get on a bounce when it comes to a daily, you're going to get into this and you're going to look at your 15-minute at your 15 minutes chart, and you're going to look for confirmation, and you're going to do your 15-minute moves, which are pretty much spot on when it comes to this. And then your take profits are going to be on what you want to do. If you want to do a smaller take profit that I was used to doing, which is the ketchup, mustard, mayo, then that's something that you can do. Or if you want to use the institutional bias and take this thing for a long ride, this is something that's going to help you guys a lot. If you're a free member to TradingView, you can actually add this on with your TDI and your EMAs, which will give you good confirmation. If because you get up to 3 indicators. If you're a paid member, you could actually put more on there. But if you are going to do intraday trading, this is a big tool that you need to do intraday trading, because this is actually about 90% accurate. If you are patient enough to wait for the flip of the institutional bias, then you will make a lot of money. And again, it's up to you on how you want to do it. If you want to do the smaller take profits where you want to do ketchup, mustard, and mayo, then that's great. If you are somebody that can hold it, then this is going to tell you how long to hold it. And it'll take you a little bit. You're going to see ups and downs. You're going to see your account fluctuate. But I'm talking 453 pips, 600 and something pips. This is a big boy. This is actually something that you can just jump in the middle of a session. It doesn't matter where you're at, as long as you can hold it. You lower your lot size, you can jump in wherever you want. And as long as it's an uptrend and it's not going sideways, you're going to make your money. You're just going to have to wait and you're going to have to hold. But if you do it the right way and you jump in where you're supposed to jump in, sky's the limit on how much money you can make. And you can make it really quick, really quick. So this is something that you guys, if you guys aren't looking for intraday trading, this is something that you guys really want to check out. This is it. This is it. We're going to get into, smaller intraday tradings, but this is the bigger intraday trading. This is almost getting into swing trading. But if you guys get into this, ketchup, mustard, mayo, this is easy. If you guys do that, that's easy. If you use this, all you got to do is jump in on the W where that thing's flipped. And I mean, you'll get that in minutes. And that's why you see when Jacob puts a post and the trade activates, you actually get your first 2 take profits in a matter of an hour or hour and a half. I mean, it's that easy, because the entry is perfect because of the institutional bias. It is exactly where he wanted it to be. It is exactly where it flipped. It's not like a swing trade where we got to wait. It's exactly where it flipped, and it's exactly when it changed trend. So once you do that, you might get a little bit of a pullback, but after that, it's gone. You know what I mean? I mean, minimal pullbacks. That's why his entries to stop losses are only 15 pips, because his change of direction is right spot on. Does everybody understand that? All right, I'm going to stop recording, and we're going to start doing some little bit of lab and asking a couple questions. Everybody can unmute themselves, please.
So, Rocky, that indicator's called institutional bias?
Institutional bias. And it is the change of the flow. It is the change of direction. It's not on a small period of time. It is actually for a bigger period. It's pretty much your what do you call the price action on the TDI? What I call a price action? Your sentiment.
Yeah,
sentiment. It's your sentiment in a bigger time frame. It is used for intraday trading. It is exactly the change of flow. So have you guys ever heard of breakouts? That's what we're going to do next week, breakouts. This is the epitome of a breakout. And we'll get into that too. That's next week's intraday class. But this is something that if you use it the right way, if you're patient enough to use it, you're going to win 90% of the time. This is pretty much what Craig does with his EMA flip, but on a bigger flow structure. You know, Craig will do it on small level threes, level three. No, this is the flow of the market. This is what the actual market makers are pushing for the currency, not the ups and downs. Does everybody understand that? All right, let's go down the order, man. Let's ask a couple questions, and then we're going to do a little bit of lab. Craig, what you got for me? Nothing? You good? George?
No, just looking. It's interesting.
Okay. Dave?
Same as George. I'm just looking. I just put it on right now. I'm wondering if it's spot on with looking at the sun.
Absolutely.
Yeah.
Dino?
No, I'm good.
You good with it? Yeah. Nate?
Hey, so this basically we're looking at a 15-minute chart when we're doing this.
Yeah, you're gonna look when you're doing institutional bias intraday. It's 1 hour and below.
Hour and below, and then the catch up mustard and mayo. The mayo is what EMA.
Yours it would be the white one if you got a black background, or the skinny purple one if you got a white background.
Okay.
Charles, what you got for me, bro?
I got in a little late on it, Rocky. Sorry about that. But you gonna repost this?
Absolutely.
Okay. And that you said that indicator is already on TradingView?
It's on TradingView, yes. I actually put it on my TradingView yesterday, so we can do lab, so we can check it out.
Are we gonna be able to get it on our MetaTrader as well?
I'm not sure. I mean, I've seen Edwin. Have you guys seen that ever on MetaTrader?
Yeah, there's one for it.
Okay.
I just put mine on.
Oh, you did? I see what you got for me, bro.
Got a question about that indicator. Does it repaint?
Yes.
Okay.
Yes.
What you mean by that, Hassan?
Like a lot of indicators.
They move.
Yeah, they may show like one direction, and then it may repaint and change and show something else.
It's like your level 3 indicator on your MetaTrader. You ever see if you got the level 3 indicator on your MetaTrader, it'll turn level 3 and then you get a new high and it'll change. But this is pretty much spot on. This is a great indicator, man. Again, you got to use it with, and that's a good question I've seen, because it repaints, your trend line structure has to be solid. You understand what I'm saying? Your trend line structure has to be solid, so your level counting has to be solid to use this. This is nothing that you just wait for the colors to change and you're in. You got to make sure that that level 3 happened, and you got to make sure the direction is going to. And when it happens, you're good. And that's why Hasim, that's why it doesn't change colors at the level 3. It makes sure that the direction has changed. Do you understand what I'm saying? So that it's a great indicator. You might get a little bit of repaint, but it's not going to be. It makes sure. That's why it waits. I mean, it almost waits to the level 1 before it even. Daryl, what you got for me, bro?
Yeah, I got on late, so I had to see the video.
Oh, not a problem, not a problem. I'm gonna post this, man, for sure. This is something for people that I think Craig, you're doing a little bit of intraday trading, right? You're just using the switches of the EMA still. Craig, can you hear me?
Yeah, I can now. What's up?
I said you're still using the switching of the EMAs. That's how you're trading, right?
Yeah, in a way, yeah. I still look at the levels for the N's and W's though. I mean,
of course
I gotta know which way it's going, or I won't do it.
Of course, this is great because this is great for you because if you're pushing for bigger pips or even you know how you're when you're watering your blueberry cross on a level 3 change of direction, you're only going to the next level 3, or to your destination of take profits, right? And then you're gonna wait. This you can actually hold. You can actually hold this. I mean, you can hold this for a long time.
Most of the time you see me do 15, 20 pips, 30 pips, 40 pips.
Absolutely. But think about it like this. Okay, so that's today money. But imagine if your swing trade can be 400 pips just by holding. You take two take profits, your ketchup and your mayo, or your mustard and your mayo, or your ketchup and your mustard, and then your swing trade is for the duration of the institutional bias. First. All right, Los, what you got for me? Good.
Yo.
What you got for me, bro?
I got on late too, man. I'm working, so I guess I'm gonna have to watch the video later on.
Okay.
But let me ask you a question. Is that something like what I had sent you yesterday? I mean, I don't know because I just seen the way.
No, what you sent me was a bot, and I don't recommend them. I never used them, but from what I've heard from a lot of people, it's not. I mean, I've always heard bad things about bots, so that's why I don't mess with those things.
Yeah, that's why I sent it to you, just to find out what you thought about it.
No, absolutely. Willie, what you got for me, Willie?
I'm good for right now, Rock. Just listening.
Okay. Jovan.
Yo.
What you got for me, bro?
I'm 100, bro.
Okay, so what we're gonna do now, if nobody got any questions, we're gonna get into lab. We're gonna start looking at this on the charts and see how it actually confirms the flow of the market. All right. Let me this up. Damn mouse, man. All right. All right, can everybody see my my screen? All right, so I'm gonna insert indicator in here. It's one that's called inline institutional bias. This is a 50-minute chart. We're going to minimize it so we can see the beginning of this thing. All right. Man, my computer's going so slow. Look at this uptrend, you guys. Come on. I've never seen it do that. Okay, anyways, so check this out. If we would look at where it flipped right here. Your pullback was a lot, 93.788, all the way to 93.36. So you lost about 40 pips. This is why your trend line structure is important, because you would wait for your W to actually take this trade. You would know that coming down here, this is not the ticket. Actually, it was right here. Right here was your trade. It did show a W. W was right here. Okay. It would have took you down 40 pips. You got to hold it if you trust the method. When you hold it, it started at 93.79, and the end result was, at its highest point was, if you do your trend line structure, you know where you would get out, but it's the highest point, it would have been 1,598. So you're talking 100 pips on a small 15-minute, 93.78. Yeah, close to 100 pips. And then if you would have took it at the flip would have been at 99.30. No, I'm sorry. That's about wow, that's about like 200 and something pips at this highest. That was 300 pips. Yeah, about 200 and something pips at its highest. Now, if you would have got in here, which would have been the 98.90, and that is lowest point, but this is still going to drop, but at its lowest point, it would have been 98.26. You're talking about 70 pips from here to here. And those are the trades that Chaikin trades, because he does catch up with mustard and whatever. So that would have been even though this is still, it's still a good trade right here to right here. But if you're going with the institutional bias, this thing is still going to drop. It's still going to go down. If you look at your Bollinger Bands are pointing down. Sorry. Your Bollinger Bands are pointing down. Everything is saying this thing is going to drop. Your sentiment is pointing down. Your RSI and your blood pointing down. Everything pointing down. You were going to get into some action right here. This is going to be a big drop. Now again, if you're going by institutional bias, this is still in play, because we got in right here at 98, 930, and it's at 98.79. So we're talking 20 something pips. It retraced, and it's still going to go down. So this is still in play. We'll look at this on Sunday to see where it's at on the XE. Retraced a lot. We can actually jump in this and take the actual move for as long as this is bias. So for as long as this flow is actually moving. All right. Let's look at something else.
If you're trying to really hold it, are you holding it until it flips again?
That's the key. But if you do your trend line structure as far as a daily and your 4 hour, and you already got your predictive analysis, you can actually hold it until then. You're just gonna go through ups and downs. But on an intraday level, this is really easy to get your pips.
It sounds like the trend line is going to be best to look at, because you'll pull out with your highest pips, your highest dollar amount, or whatever you want to pull out at. It's going to drop again eventually.
Absolutely.
All that.
Absolutely, because it's going to respect. It's going to respect the trend line.
Rocky, with this, then, like if the trade goes up 27 pips and you take a profit at 20 pips or whatever, a lot of times we're moving our stop loss to entry. Like for something like this, then we would it then, right? I mean, if we're going
again, if you're gonna do it on a smaller structure, like I was taught, then it was get your ketchup, mayo, and mustard, and move, and get out. Okay. On something like this, you would have to put your stop loss a little higher, and then and just wait. And as soon as she starts dropping ridiculously, when you're up like 50, 60 pips, then you can move your stop loss. You know what I mean? Into profit or into break even, and then just roll with it. So you can use this on 2 levels. You can use this as a swing trade, a huge swing trade, or you can use this as a small intraday structure where you're going to get your pips right away, because you're going to get them right away. You guys understand that? If you guys wait for the flip, it's going to flip and you're going to get them right away. It's not going to be too much. You know what I mean? I mean, you're going to get it that day easily. But if you're looking to push them for a long time, then yeah, you can wait for a little bit, 50, 60, 70 pips before you move your stop loss, because you're not getting into a prime entry. What you're doing is getting into a for sure entry though. You understand what I'm saying? But you might get a little pullback, but you are getting into a for sure entry.
Hey, Rocky.
Yes, sir.
That is called the inline institutional bias, right?
Correct.
I'm popping that thing. It's just not popping up on my screen like yours is. Your red and green.
All right, so I'm going to show you which one I got. All I did was put institutional. And it's right here. It's by TSM MOB.
Okay, click that. It just doesn't show up on the screen like yours showing. That red and green line is the indicator, right?
Yes, sir.
Okay, I figured it out. It's just not showing up. I keep clicking that. It's just not showing up on the screen like yours.
How many indicators do you have under just the Forex LG indicators? Your EMAs and your TDI?
No, I just have the TDI on there. I took everything off except that. You know what? I'm on a 15-minute time frame. Maybe that's the problem.
No. It works on all time frames. You should see it on all of them. But try it anyway. See what it does.
I don't know. Nothing like yours.
It came up on mine, Charles.
Yeah? Okay.
Yeah, it popped right up.
Okay. So this is the 1 hour. Remember, intraday is 1 hour and under. This is the 1 hour chart. So this will be a level 3 triple top, right? Boom, boom, boom. We would have got in here. We would have made our money. This was the flip of the flow, though. That was the flip of the institutional thing. So you would have lost all of that. But on the other hand, this would have been a for sure bet. Like for sure. So if you would have got in there, you would have been at 149.442 and 143, 16, whatever. It's, 700 pips, 600 pips.
Yep. The way I'm looking at it, you just got to keep in mind, because you are going to lose. You're going to watch it lose for a while before we go back down.
And you're going to see ups and downs on it. But on an intraday level, you're going to make your money quick.
Yeah.
Is that equivalent to a 200 EMA?
Yes.
That's what it is?
Yes.
Okay.
So, and if you would go, let's do 30 minutes. Sorry. I mean, you could even do this on a 5 minute to be really, really quick with the gift. Let me show you. She doesn't change as much. Let's go somewhere else. Let's do 30 minutes. Okay. So here, this is a sideways trend that I don't recommend anybody to ever trade. But sideways trend, this will give you, if you got in here, you were at 23,152. It breaks structure. It comes up, the highest point, 24.14. So 60 pips. And then if you would have got in here, which is 22,338 at its lowest point, 15150, 800. That's amazing.
But even on that 60 pip gain, it's good. You know?
I'm sorry?
Even on that 60 pip gain, that's good if you enter 3 times.
Absolutely. Absolutely. At the intraday level, absolutely.
Yeah.
This is really used. This is really, really used with intraday people. People use this all the time just to know the flow of because they don't want to guesstimate. You know what I mean? And when it comes to smaller time frames, you can't chart out like you do the bigger time frames. You know what I'm saying? And it's like I was saying, like market manipulation and news manipulation really affects the intraday trader. It doesn't affect the swing trader because, I mean, you get a 50 pip stop hunt in the middle of a trend on a swing trade. You don't even see it. It's within the candle. You know what I mean? But when it comes to this, you're going to really see a spike. You're going to see something crazy. You know what I mean? So this is something that you really got to use if you're doing intraday trading. What's up, Dino? You were going to say something? Sorry.
No. I was going to ask, how do you make it curve instead of flat at the bottom of the top?
And which what? What are you talking about? Which what?
Like it seemed like it curve. It go with the
It goes with the price.
Yeah.
Yeah, because it's showing you the flow. I'm not doing that. That does it on its own. But it's showing you what it's actually doing. It's showing you what the market makers are actually doing. So even if it came up like that, like a triple top right there, it's still going to come down. Now it's ready to come down even more. It's just going to come right down and it's going to flip those EMAs all over again. If you look at your TDI is a big, I mean, I use TDI all the time, but if you look at your TDI, look at your Bollinger Bands, look at everything just pointing down. So this thing is going to continue to go down.
I also see you can also put a line across there and do your bounces.
Absolutely. You can absolutely
another good entry point if you missed it or something.
Absolutely. You could absolutely do your trend lines. Again, the trend lines will get broken a lot with intraday because of news and stuff like that, but you can also absolutely do that. Anybody got any other questions, you guys?
Basically, if you're like, let's say you're stuck in a drawdown, like you went, let's say you, like on this one here, it's going down and you see it continuing to go down, but you got stuck in the drawdown and you're waiting for it to turn around, you can look at this indicator whether to get in or get out.
Absolutely. And this will give you a better view on things, so you won't get as nervous. You know what I mean? I suggest you don't swing with this. I suggest you do intraday trading with this because this is what it's meant for. You know what I mean? It's not meant to actually hold for 450 pips or 600 pips. But I mean, if you're going to use it on swing trading, great. Tell me how it goes. I never used it on that. But as far as intraday trading and taking your daily profits, this is a great tool. And it's not actually to use for, like I said, to hold it for longevity. It's actually just to give you confirmation that you're going in the right direction. And the trend is still moving your way. The flow is still moving your way. So just in case you do get a pullback and you do get into the flip, instead of getting into your level 3, then you got to understand that you are going to get a bigger pullback. Once she starts dropping, she doesn't come back though. I mean, you might get a pullback as soon as you get in. So if we got in right here, oh, I'm sorry, let me share this again. If we got in right here, down here, we would have got this pullback, but once she left, it was over. You know what I mean? So you got to expect that. When I did intraday trading, I did it with the 4-hour and the daily charts, and then I got into my 15-minute and used my second leg. But it was until I was getting really whooped on with intraday trading that Jake introduced this to me and explained to me that he just as directional flow so he could, that's why he'll tell you, oh, just hold it or get out. I don't know what's going on, and that's when it starts going sideways. But when you use directional flow, you know exactly what's going to happen in the actual market, and you know what the market makers are doing, so you can actually trade with the flow. And that's why I said if you use this on a bigger structure, I mean, for longevity and get bigger pips, you can actually jump into a middle of a trade and just hold. If you lower your lot size and actually and can take the pullback, you can actually take this for a ride. You literally can. I mean, I don't suggest anybody to do that, but I suggest everybody, if you're going to use this, use it with the intraday rules and use it with the intraday take profits, and get this, and know that once you get in, you might get a little bit of pullback, but once it pushes through, it's over. It's not coming back. She's gone.
And that's within it as well.
I'm sorry?
The trend lines within it follow the rules.
Oh yeah, of course. You want to do your trend lines regardless. You want to try to see if you can find trend lines. Again, smaller structure, smaller time frames doesn't really obey by those rules, but if you can find them, that's great. But your trend line should be on your daily and your 4 hour. Regardless if you're ever doing swing or intraday, your trend lines are always on your daily and your 4 hour. Your entries are always on your daily and your 4 hour. Those are your points of interest. That's where you want to go. You want to see those bounces. So even if you're doing this, you want to look at you're looking at your 4 hour or your daily for the bounce. And once you see that bounce where it's getting close, then you switch over here and then you get your entry there. And then once you get your entry there, that's when you go ketchup, mustard, mayo. Or you could just wait until the flow flips and then you jump in. Because remember, if you're going to take this for the long haul, all this is the bounce from one level to consolidation, or consolidation to a level. This whole thing is just one level to consolidation, or consolidation to another level. But this just gives you the option to hold it all the way through. And that's why the pip is so much, because all it's doing is moving you from level 1 or to consolidation, or consolidation to level 2, or vice versa. But this gives you the actual flow of the market. Does anybody got any more? I mean, let's do it. I'm here, man. I still got time.
So, I mean, this you could use on a 15-minute chart, and then you could still use the the other indicators too, like the blueberry and water flipping, and then the TDI.
Yeah, the blueberry and the water flipping are for smaller structures and smaller entries. I mean, they're almost that. My son's roommate is here, and I taught him the flip of the water and the blueberry a day before yesterday, and he woke up yesterday morning and texted me that he made 45 pips for $4.50. I said, man, that's amazing. You made 45 pips, and that's all he was doing. He was just looking for the water and the blueberry to flip, and the EMAs to crunch up, and he would just jump in.
I've had really good luck in the higher time frame on 1 hour, really? 3 hour, and daily. I've had really good luck with that.
Is that how you do it? You do it with the flip on a higher time frame?
Yeah.
But your pullback is a bitch, isn't it?
Yeah.
What two are you talking about flipping, Rocky?
The flipping water of the blueberry.
Water in the blueberry?
Yeah. When the water and the blueberry flip, that means your EMAs flip.
Okay.
And then once you're in, but you can't do it in a consolidated state. So you can't do it when it's going sideways. You got to see your ups and downs. You got to see sharp ups and downs. And if you can do that, and that's everything. That's intraday and swing. You can't do it in a consolidated state. It can't be sideways. You got to see the bounces. If you see the bounces and you wait for the EMAs to flip, it's over. When you come into the 15-minute intraday trading and you see the water and the mail flip, that's almost like 100% trade, man.
But you do so much more when you catch the level 3.
Yes.
It's just it's better.
Level 3 is where it's at. That's why we trade reversals. That's how we trade. It's a smart thing to do. And that's why I say even using the institutional bias, you want to catch your level 3s, man.
Hey, Rock, can I share my screen real quick? I got to ask you a question.
Of course, bro.
Now here, obviously the ketchup is that red, right?
Yeah, the red.
And this orange is mustard?
Yes.
And the mayo, is that my blueberry?
No.
Which one is that one?
You don't have it.
Oh. I mean, I always use the 4XLG. That's why, why wouldn't I have that?
Oh, it's above still. It hasn't framed out yet. She's about to flip, that's why. Oh, it's above you. Why is it above you? Yeah, it is above you.
This one up here?
No, the one under, the 2 in the bottom, the skinny one right there, that's yours.
Oh, that's the
red one?
The skinny black one.
The skinny black one.
So that is my mayo.
That's your mayo.
That's racist, Jorge.
Hey, I turned the white one into black, dude.
So that is your mayo. Damn, that is a beautiful chart. What is that?
GBP JPY 1 hour. Well, I believe it's my 4 hour, but I got it in 1 hour right now.
Okay, let me see something. Don't move. Don't move. Hold on. I'm gonna check something out. Yeah, she's still on the downtrend. If you now go to your 15-minute. You don't have it on there, huh?
Have what?
The institutional bias. Oh yes, you do.
It's up there.
Yep. So it shows you that it's about to drop. And go into your 15-minute, and your 15-minute will actually confirm that you're going to get a drop as well, but not yet. You see it? You're still going to get a drop. Your EMAs are not completely fanned out in your 15-minute. So you got to use all those indicators, man. I mean, all those indicators work, you know.
Because that right there, if you look at the TDI down at the bottom, it's going to go down a little bit. It's going to shoot back up, and then it's going to drop down again.
Yep. Just because it's oversold, you know what I mean? So she's still got to come up a little bit, and have a good bit of time for the EMAs to actually fan out. That's a good one. That's a great.
So here on the 50 minutes, you wouldn't get on right here when it's crossing like that?
I would get in when it hit your trend line.
Mm-hmm. Yeah, no, I understand, but I'm seeing what Craig is looking for.
That means he's saying it because you see how they flipped. That means it's gonna come up because your blueberry's gonna go above.
Oh, I see. Water. Okay, yeah.
You see what I'm saying?
It's gonna come up for a while, hit that trend line probably, and it's just gonna go right back down.
Yep.
So you're following the blueberry, right?
Yeah. See, what happens is that your EMAs have to stay in order. So it's got to be price action, ketchup, mustard, water, blueberry. They got to stay in that order. When they flip, that means there's going to be a change of direction. And that's what's happening there.
Price action, ketchup, water, and...
No, price action, ketchup, mustard, water, blueberry. So what he's saying, what Craig is saying, if you see your blueberry and your water just flip like that, that means you're going to get another push up. You see what I'm saying? Until it actually gets back in order and fans out, and then you'll get your drop. Does that make sense?
I'm sorry, Rocky. Goddamn FedEx came to the door.
And then remember how his mail was above on the 1 hour? Look at his mail now.
Yeah, right here.
Yep. So that'll be your last point of take profit. Once everything gets in order and she drops.
I'm sorry, Rocky. Price, ketchup, mustard, and water.
Price, ketchup, mustard, water, and blueberry.
Mustard, water, blueberry. Like that.
Now, this thing might go. I mean, she might pull a little bit, and then she's going to take all the EMAs, and the EMAs are going to go with it.
Yeah, because this is not going to flip again, right? Because
no. Now, remember the EMAs go under the candles when it's an uptrend and above the candles when it's a downtrend. So that's going to be above when she drops. So what it's going to do, it's going to pull it's going to pull your EMA and it's going to pull your mustard down with it. And then your blueberry is going to stay straight and your water is going to stay straight. And then the EMAs, the price action, the ketchup, and the mustard are going to flow with your candles. And now the EMAs are going to be above. So this is a great point of taking the trade. Absolutely. That should have been your sell right there where it crossed. You see it got a little bit more to your left?
Yeah, right there.
Yeah.
Yeah. So I noticed the water's always next to the trend closest.
Yes. So what's happening now is a crunch up. So what happens is all your EMAs are going to crunch up and they're going to flip, and then your trade is right there. So if you would have took the trade on that high right there to your left, the second high, right there, that would have been your trade. That would be your sell.
Okay, that makes sense.
On the 15-minute though, you know what I mean? And then your take profits would have been. I mean, your take profits, truthfully, if you're going to do ketchup, mustard, and mayo, would have been on the C leg right when they hit the trend.
So you go, let's say you go here. Not that, the 1 hour. So you go here, you have let's say you have that M here. Then you will go back to the 15 minutes and look to see, obviously, if you have your M and that's flipping, and then you take it.
If you're going to use the institutional bias, yes. Yes. But I would have took it on the second leg on the daily because I'm a swing trader. So I would have took it on the second leg on the daily. What I would have done is I would have waited for the second leg to start forming. And then right when it was getting close to the trend line, I would have actually looked down my 15 minutes to see if it hit a level 3 or not. And if it hit a level 3 prior, then that's when I would have took it. I would have put my points of my buy zones or my sell zones and see what was going on. But that thing is gorgeous. If you look at it, it's already fanned out. Everything's flowing. Everything is looking good. I think it's actually going to break your structure, but it looks great. And I mean, your Bollinger Bands are really expanded. The only thing I don't like is that your EMAs are not, your male and your 800 are not under, which is not, typically what you want to see when you're taking a trade like that. You actually want to see it above because that's a point of resistance. That's a point of support. I'm sorry. So that should actually be under your trade. That's why I think it's going to break your structure. You probably want to change your trend line from the bottom of your zero and push it across your B leg to see if that actually flows the same way. Yeah, see, it doesn't flow the same way. So if you move it down, that side down, it's not even that much either, huh?
No, it didn't make the way I did is the way
parallel structure.
Yeah, absolutely. I cloned it.
Yeah, you cloned it. Absolutely, that's a great way to do it. Yeah, well, this is only in 1 hour too, so yeah, I mean, this is a great move. The male and the male and the 800 will probably get in there when you see the big reversal on the E. You know what I mean? That's probably when you see the bad boy go.
Okay.
But yeah, that's a great structure, man. Beautiful structure. That's something that you should look at on Sunday. Actually go to that XC and see where the price is at. It probably retested, and if retested, that thing is ready.
Okay.
Good structure. Has anybody got anything else? Stop sharing, George. All right, let's go through the list again. Ed, you got anything? Nope.
I'm good.
Craig? George?
No, I'm good.
Dave? Dito? Nate? Charles?
I'm good with this, Rocky. One day, though, I want to get with you and on the EMAs, though. I've looked at the video, but the stuff you were saying just then just kind of went over my head, man.
Okay, so this is what we can do, Charles. Let's set up a date for tomorrow morning if you got time. We'll actually watch the video together, and whoever wants to join that, we can actually watch the video together, and we'll go through it. All right?
Okay.
So Charles, you tell me a good time tomorrow prior to the market opening, and we'll jump out for like an hour, and we'll go through your class.
Anytime in the morning would be good for me.
Me too, same here. So it doesn't matter to me.
So what's been good for you?
Okay, so let's do like 10 a.m.
Sounds good.
Okay. Hasim, you got anything, my brother?
Excuse me. No.
You good?
Mm-hmm.
Does everybody understand it? Regardless, does everybody understand how it works?
Yes.
Okay. Junior, what's up, bro? Nice to see you, man.
What's going on, bro?
Good. What you think?
I was good, man. Just same thing. Watch it again.
Okay, yeah, no, I'm gonna put this class up again, just to give you guys, just to generalize this. All this is the change of the flow of the market. And when you're doing intraday trading, you want to know the flow of the market. This shouldn't change the way that you trade at all. Again, you can get into it at the flip, but I suggest that you use your trend line structure when you do intraday regardless. Because when you do intraday trading, you're just going for shorter pips on a 15-minute scale, but you still need to use your 4-hour and your 1-hour charts because that's your main focus. You know what I mean? That's where your bounces are, your big bounces are. So on a 15-minute, it's going to move so small that you could take those pips. That's what intraday trading is. That's what day trading is. It's taking advantage of those small pushes once it bounces off the bigger structure. So the trading of your intraday trading should not change from the method that we use. The only thing that you're changing is that you're not waiting for a level 1. You're catching all your pips in between that level 3 and that level 1. Does everybody understand that? That's all it is. The institutional bias is just telling you, yo, you're going in the right direction. Don't worry about it. That's all it's saying. It's saying you're not going against the market, so don't worry about it. You guys understand? So when you are into your consolidation of your level 1 and you want to take it and you push for that move and it reverses on you, you look at your institutional bias on your smaller structure and you be like, she pulled back on me, but I'm okay because I'm still going with the flow. You know what I mean? So if you lower your lot size at that point, you can actually take the pullback and you can make a lot of money. You know, I trade at a small lot size compared to my account. And I learned that from Jacob because he always said, listen, if you pull back on your lot size, you can pull back on your stop loss to be the same thing as if you were trading up to 0.1 of your account. Make all the sense of the world. And when you get into bigger lot sizes like that, like standard and a half, then the money is perfect. The money's okay. But you shouldn't change your trading style. Just use this as a directional flow where you know that you're going in the right direction. So this is better for the counter trade. You know, don't counter trade. We always learn that. So if you're selling and you see that it's red, you're like, okay, well, I'm good, man, because it's still gonna come down. You understand what I'm saying? So you can hold it a little bit longer. All right. But if you get into your trend line structure and it bounces off your trend line structure, you shouldn't worry about that at all. If you get into your trend line structure and on the daily or on the 4 hour and it bounces off of your trend line, now you're going into your 15 minutes and you're looking at your catch up, you're looking at your mustard, you're looking at your mail. Those are your 3 take profits. You hit your catch up, boom. You hit your mustard. Now your stop loss goes into entry, and now you're pushing for your mail.
I just noticed something on the 1 hour of the GPP JPY using that right there. It follows. Yeah, it follows the. If you want to, I can share the screen real quick so you can see it on the EMA. It let me see here. Share that screen. See the screen right there?
Yeah.
It follows the black line. 1 hour.
What is that black line?
This is on the EMA.
That's 800, isn't it?
Oh, the 800. Okay. Yeah. It flowed with it.
Flowed with it on the one. This is the 4 hours. You can see right here, but it just flowed very, very easily.
Damn, it does. It does flow with it. Wow. It goes right with it, doesn't it?
See that E right there? Boom. Change direction.
Yeah. M formation. You see the M formation? That beautiful M.
Right here.
Yeah. Gorgeous, man. So it waited and it took it. That's beautiful. Good call on that. Yeah, it flowed right with it, man.
Yeah. I just thought I'd share that really quick.
No, perfect. That's great. All right, Willie, you got anything?
Not right now, Rob.
Okay. Jovan?
I'm 100, bro.
You got it?
Yeah.
Okay. So that's great, man. I mean, I hope everybody enjoyed this. We got like 5 more classes on this, intraday trading. Next week, Jacob will be joining us. Next week and the week after, and then we're going to close out the next 3 classes with intraday, and then we're going to go into PSOs, and you guys are going to like those as well. All right. Does everybody have a great weekend? Do you guys have anything else before we close this out?
Hey, Rocky, just real quick. Like I made the mistake of not getting myself prepared for the new way to deposit into the Trader's Way. So everybody might want to start, whoever hasn't done it, might want to start getting themselves certified for that or whatever you want to call it.
Yeah, for that velo crap or whatever they're doing now.
Yeah, you pay card velo, whatever, because it's taken me forever to get that strain out. I mean, it's been a week. And if you deposit with a VLOAD, you cannot withdraw with VLOAD. VLOAD is only a way to deposit.
How do you withdraw them?
You would have to choose another way of withdrawing, because if you look at your Trader's Way homepage, you're allowed to deposit with VLOAD, but there's no option to withdraw with VLOAD. And I send them a message and it says you have to pick another way to withdraw. So if you're going to withdraw with UPay card, let's say, why not just use UPay card to deposit as well?
Deposit.
You know, but UPayCard is really hard to get yourself certified. Now I got myself certified with UPayCard to deposit as a transfer money order, but I can't use PayPal yet. They're giving me a hard time with that.
So did they change the PayPal option now? There is no more PayPal?
There is a PayPal option for UPayCard, but I'm having trouble with the documentation they need me to provide for them.
You know, you can. Do you have
a problem too?
You can actually withdraw through Bitcoin though.
Yeah, but I want to. If I was gonna have UPayCard open, I already have it open. I'm gonna see how much it costs to just do the transfers from the bank. So I just figure I share that for people, especially they don't have a life accounts yet, and they don't realize that they have to go through all that mess. And then next they say, "Oh, I'm gonna start tomorrow," and then they can't do it. You know?
Yeah, absolutely. I think Barney was having that problem. Did you talk to Barney, Edwin? Was he able to fund his account? All right, cool. We'll talk about it later. All right.
Did you withdraw yours with Bitcoin?
I have, yes. I have since the change of all that crap.
Okay.
I mean, if you got a Bitcoin purse, that's the easiest.
I do.
Yeah, that's the easiest way to do it. Jovan, how did you withdraw your last withdrawal? Through Bitcoin? Okay, cool. We'll talk about it later. All right. All right, you guys. If you guys don't have anything, man, have a blessed weekend, you guys. I'll see you guys tomorrow. Tomorrow we are going to look at all pairs. Correction happened this week, so everything should be flowing really nice. NFP was this Friday, so if you guys didn't notice, Thursday was kind of choppy and crazy. Friday, everything was trap day. It was really trap day on Friday. So everything should flow by tomorrow. By tomorrow open, everything should start correcting itself, and we should have a great week this week. I didn't ask you guys, how was your trading week this week anyway? Did everybody crush it? Did everybody do good? What was the outcome of this week? Did everybody end up positive?
I was up for the week, so I did good.
Okay, good. I was actually up for the week as well. I took a couple shots, but I actually did pretty good this week. Did everybody else do good? Dino?
The beginning of the week was rough, and then I had 3 good days in a row. So
good. Craig?
I did pretty good overall.
Good. Charles?
Not really, but I get there. Not really, but I get there.
Well, I understand what your problem now is. Now that you asked me that question, I didn't know that you weren't familiar with the EMAs, and I'm glad that you said that. I want everybody, if you're not familiar with something that we studied, man, without those indicators or without mastering those things, you're actually trading blind. So if you're not using, EMAs are very strong, like very, very strong. You know what I mean? Those are points of resistance, and they indicate so many different things that if you're not using that correctly, that's the reason that you might be losing on trades. You know what I'm saying? Like, those are really strong trades. I mean, really strong indicators, man. I mean, I wouldn't trade without an EMA at all.
That sounds fun.
So that's great. If you guys have any problems with something that you guys don't understand, please let's get on that. That's what we're here for. I want to make sure everybody's making money. I don't want to hear nobody losing money.
Let me go backwards in the questions, but this institutional bias information here, how do we get this on our notes?
Did you know that?
On an MC4? I'm not sure. Edwin said that it's on the MC4, so
people in my class.
I gotta figure out how to put the EMA and TDI on my phone, so that way when we're traveling,
that's easy. You got an iPhone?
No, I got an Android.
Oh, that's your phone.
Yeah, that's a problem.
You're coming up here in about 3 weeks, Rocky. I'll be seeing you in person.
No, I'm not sure how to do it on the phone, but on your Android, but on the iPhone it's pretty easy. So it's the same way. If you look on your phone right now, and you get into your MT4.
So there's a part here where I can add, and on the main chart.
Yeah, where you go to charts, you're gonna go into the F.
Right.
And then you're gonna go into the indicator window 1.
Right.
And then you're gonna look for TDI.
Hold on. It says trend, oscillators, volumes, and Bill Williams. So
It says what? Oh, okay. Hold on, I'll find it for you. You see where it says moving average on the trend?
yeah.
Hit moving average. And then
it tells me to pick a color.
It tells you to what?
I can pick the style for the pixel, like the color for the pixel. So I'll keep it red. All right.
Oh, that's only your 50. Hold on, let me see which ones I have. I have relative strength index and moving average. That's what you want to look for.
Relative
strength index.
Told you one time.
That's your RSI and your moving average.
I don't know. All right.
And then on your main window, you should have moving average.
All right.
And when you push moving average, your period should be 50, your shift should be 0, your method should be exponential, and your apply to should be close.
So an alligator and a big shark, you will not.
I'll work on that tonight before, because I tell you, sometimes when you're on break, you look in and you're like, oh man, where's my PDF? You know?
But actually, no, I only have the 50 on there. Let me see if I can get you guys. I used to have the EMAs on here. Let me find
You say 50-0 method is simple.
Yeah. But let me get you the EMA. Should be exponential.
In the aquarium. You see.
Hold on, let me find it.
Period is 50.
Yeah, but I used to have my.
Yes.
You know you're still recording, right?
You know I'm still recording, George?
Yeah.
Did you know that? Damn.